All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Thursday morning Inner Circle live session. I'm your host, Ryan Carthage, joined by my awesome partner, Mr. Casey Jackson and Mr. Benny Allen. I hope everybody is doing well today. So we are going to dive in. We'll do an overview. I know Benny went over quite a bit last night. We'll do an overview of the charts where they are, dollar perspective. We'll take a look at some yens. We'll take a look at a couple of the NZD pairs as well. Excuse me. And then if we have some time left, if you guys have any pairs you got your eyes on, we'll take a look at those as well. So as always, let's try not to fall distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So, Casey, good morning. How you doing?
Good morning, Ryan. I'm okay.
Good. All right, good people. So we're going to switch over to trade and economics. Take a look at that real quick. Just a couple things to note here. Euro area economic sentiment deteriorates. Economic sentiment indicator in the euro area declined for a fifth consecutive month to 99 in July, the lowest since February of last year, and below the benchmark forecast of 102. Sentiment deteriorated across all sectors as the war in Ukraine and the energy crisis continues, and interest rates and inflation march higher, right? So the euro area is still taking a pretty big hit, right? So there's some back and forth happening there with interest rates continue to increase, and so it's interesting when you look at some of those euro pairs. So we'll take a look at those and see how they've been impacted by the sentiment here. And then the other thing is the U.S. economy, right? We have GDP numbers coming out today, which are said to be really important. There's another note that Jerome Powell made yesterday that they're going to be keeping their eyes on from a data perspective that I want to also take note of as well. But the American economy is expected to have grown an annualized 0.5% on quarter in Q2, following a 1.6% contraction in Q1 and barely averting the technical recession. It would be the weakest GDP growth rate since Q4 of 2012, with some forecasts even pointing to a decline in economic activity, including the Atlanta Fed GDP Now tracker, which sees to a 1.2% contraction. External trade should weigh positively amid a rise in exports, and spending on equipment is seen higher, while private spending likely slowed as higher inflation and interest rates weigh on consumers' affordability. At the same time, business inventory is expected to have slowed sharply after big jumps in the previous year. Fed Chair Powell recently said he did not believe the U.S. was in a recession and pointed to the strength of the economy, including the labor market. The American economy shrank an annualized 1.6% on quarter in Q1, the first contraction since the pandemic-induced recession in 2020. All right, so the expectation is that we barely skate by this technical recession. That's what the forecast is. We'll see if that actually happens, right? Fed Chair Powell did use some interesting terms as he bounced back and forth on this line, saying that he didn't believe personally that we're in a recession, but the Fed does not determine that. So that's that piece. We'll go over the calendar real quick. So this is a GDP number. We also have core PCE, which is personal consumption expenditure, right? How much are individuals spending? So that's going to be a number that's going to be kept our eyes on as well. But the other piece that he mentioned is, excuse me, personal income and personal spending. In a statement yesterday, he stated that the Fed is going to be watching this number also as another data point to determine how inflation is impacting the consumer, individuals. So this is something that we'll see if the market responds to this today. And then going forward, we'll see if this number becomes something that investors respond to as we continue to track this thing going forward. So this is another data point that we'll keep our eyes on, or I'll be keeping my eyes on as we move through the day. The other statement that Fed Chair Powell made, which piqued my interest, and I'm just over time, I'm going to continue to watch, is he said the GDP numbers, I'm sorry, that's the Canadian GDP month over month. But the GDP numbers get, I'm looking at the wrong day. My bad, everybody. This is where we are here for today. Advanced GDP for the United States. Looking at the wrong day. I apologize. So that's coming tomorrow, the personal expenditure piece. But he stated that these GDP numbers get adjusted all the time. And so a number could come in as expected and be changed in the future. That piqued my interest because what we could see in this, right, and this is me being a pessimist and looking at when it comes to the government and how things get manipulated sometimes. We could see this number come in at that 0.4%, which will say we're not in a technical recession. And then we could see 5, 7, 10 years down the line, or not even that far, we could see over the course of the next year, this number get adjusted to a lower number, right? And say, because the statement that he made was there are a lot of data points that go into calculating this GDP number, and a lot of times they're not accurate when they first come out. That says to me that something could likely happen in the future to get this number to be adjusted, and the number that we get initially is likely not the accurate number. And with it not being the accurate number, we could potentially be living through this recession, but we're told that we're not right now, right? To delay the reaction or to soften the reaction to the numbers that come out. So that's another thing I'm keeping my eyes on as well, is in the future, how does this number get adjusted? And then as we look back on this time, how is this actually seen, right? Are we seen as living through this recession and not necessarily knowing it until way after the fact, right? So that's just a little bit of how my mind works when it comes to data and some of these numbers that come out and the words that people say and the words that they don't say. So, but that's it from a fundamental perspective. Any questions on any of that, anything that happened yesterday? That's on you guys' mind. Nope. All right, cool deal. So let's take a look real quick at the US dollar. Now, with that news yesterday, we did get another push down, right? And Benny talked about this quite a bit, but it wasn't a strong move to the downside, right? It really stayed in the zone. And as you look at this, right, we pressed right down into this uptrend line, right? Still in the zone of this swing high and this monthly resistance level. So what we want to see, do we push off the bottom of the zone, right, and move back to the upside, or, right, because there's always that opportunity, do we close below? Do we break this trend line and push lower? Okay, so that's something that we'll keep our eyes on and watch, is how this zone still gets responded to. Okay, so we're still sitting in that area, and you see this candle here that's forming. It's rejecting off of the trend line currently, right? This is from a daily time frame. We'll drop down to the 4 in a second and look at it as well. But right, we're getting a reaction and pushing off of that trend line. So we'll see if that continues as we move through the day. All right. So on the 4, this is what that looks like. This is what that looks like. We got to push down into the trend line in that zone. I ran a sub fib to the downside here just to track the movement. And we also hit that D extension here on the sub fib to the downside. So we could be in for a reversal in the push up. And it's a matter of how far does that push up, and do we get a nice strong push throughout the day today and tomorrow to close above this zone and stay higher? That's the question. And that's what we'll see with the reactions of the data today. All right. So that's where we are from a dollar perspective. Back down into this range, we'll see if we push back above and then track higher, or if we push below, break the trend line, retest, and continue with that push to the downside. All right. So dollar pairs will also respond to this as the market continues to move back and forth. All right. So any questions here on the dollar? No. Cool deal. I want to take a look at this Aussie CAD, right? Because we've been talking about this one. And we see here from a daily perspective that we did push above this daily resistance level, right? But we couldn't get a strong close above the trend line, right? We're looking at this reversing out in that X and pushing back to the downside. When we get to the 4-hour, we'll see where that currently sits. But wasn't a strong close above that trend line, right? And now we're getting some indecision. So we still could get another push sideways and not truly get a break to the upside here. The opposite of what we're looking for. So if we look down on the 4, you see what happened is this strong bullish candle, right? During the news, this candle occurred, right? But this is a strong bullish move, was not able to close above that trend line, right? And then we got this sideways push. So question is going to be, do we close back below this trend line, right, today, and then come back down? It's going to be the question. Or does this area in this slow consolidative track above hold, and do we continue up, right? So we'll continue to watch to see if ultimately the sentiment changes for this particular pair, right? So that's what I'm watching for, to see if we push back down into this zone like this, right? If we do, we'll continue to watch. I'll continue to watch to see if we continue that move to the downside. But if this level does hold and this turns over and pushes to the upside, right, we'll reevaluate, right? Bias will change on that, and then we'll look to see where price moves to the upside. Okay. So that's the Aussie CAD, and that's what I'm looking at here. We didn't get I adjusted my trend line because originally I had the trend line running like this, right? But this push to the upside, right, pushed us back into that zone. And we got a higher level there. So I adjusted my trend line to the outermost point, because again, right, sideways movement, which that technically is still considered because we pushed back up. We move that to the outermost point, and now we'll monitor from there. So that's why I made that adjustment to my trend line. But that's what I'm looking for. That's what I'm looking for here on the Aussie CAD, to see how the day progresses, see if we press down or if we stay above that trend line. Does that make sense?
Yeah.
All right. Cool deal. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody.
How you doing, man?
Oh, man, doing great.
Awesome.
How you doing?
I'm doing well, man. I'm doing well.
It's good.
All right. So that's the Aussie CAD. Aussie dollar, right? Benny talked about this last night, just pushed deeper into that zone on the 4-hour, right? Came to that 786 level. And now we got some consolidation, and we'll see how the market responds to the news today, right? But pushed up into that zone, wasn't able to take out the A on this daily time frame, right? So we'll see if we get this turnover and a press back down and start crashing through those levels, right? So that's just a quick look there. On the Aussie dollar, not much doing through the night. If we go back to the daily time frame, we see we pushed up just below that 50% level, right? And this is on the daily time frame. So a little deeper retracement than we initially anticipated, but still within the sequence, still within the zone, right? Still within this AB boundary, and we'll look to see how the market responds there, right? If you come down to the 1, this is a look here on the 1, right? Push back up to the upside, so we'll address that trend line to the outermost point like so, right? And we're just sitting at a deep retracement level, right? So we'll see if we get that turnover and a press down. If you want to run a more aggressive trend line to the upside there, technically that would be your level. We'll see how this candle closes. We got to break below that aggressive trend line. We'll see how this candle closes to see if it closes higher, or if it continues to press down, that'll be a break on the 1. But I would love to see, I'd love to see it press back down below that daily level also. All right, come back and retest, and then make that push to the downside. Okay, so that's on the 1-hour time frame. That's the look there. Okay, so we'll see if we get that full turnover and press down. That news for the GDP is coming out at 8:30, so shortly after we get off. So we'll see how that moves. Any questions on the Aussie dollar? Oh, all right, cool deal. One take a look at the Aussie NZD. So this pair has been 2 commodity currencies. You get a lot of sideways movement a lot of times, right? So we've gotten a lot of back and forth on this one, and we're bouncing between this B boundary and this daily support, right? Thank you, Kim. Appreciate that. And this is our 3rd touch at this monthly resistance level, right? 1 touch here, 1 touch here, 1 touch here. So we got another reaction and another press to the downside, right? So I want to see, do we get a swing high on the daily Friday and Sunday to Monday, right, to make this move to the downside, right? That will give me some indication that we could potentially be in for another move to the downside here, right? And Ben, you talked about yesterday, because we don't have another Fed meeting until September, the technicals, right, will play a lot better in our favor, and we'll really be able to stick to those, because in theory, there won't be many large fundamental occurrences, interest rate changes that will impact a lot of the moves like they have over the past few months. So with that being said, we'll see if we get a press down, right, and a deeper push into this daily fib here, right? So we got some reaction there to this monthly level. If we drop down to the 4, we did get a 38.2 retracement here, but again, this is that monthly level that we weren't able to fully break out of, and this is that reaction that pushed back down to the downside, right? So what I'm going to do here on the 4 and tracking this movement is I'm also going to run my fib to the upside. I mean, my trend line to the upside here. And I also want to see if I get trend line break here on the 4 as well. Okay. Running there. And as we zoom into this, we'll take a look at the one as well, because the 1 hour has some interesting movement that we can also glean some insight from. But that's trend line there, and then we'll run an inner trend line coming up like so. Okay. So I want to see if we get a break of this trend line. You can run a more aggressive trend line to the upside there, but I'm going to take the more conservative route on this, right? Because this one can bounce back and forth with the two commodity currencies. Yeah, you can run that there if you'd like. But I want to see a break of the trend line and potentially a break below this weekly level as well, right? Because we've bounced in this range quite a bit. But that's the trend line to the upside. We got to swing high. We got to swing high here on the 4, right? So that could give us some indication. That's another level of resistance, right? And we're turning over. So we'll see how the market responds when we get down there. The other piece of confluence that we have is here on the 1, right, of this reversal. And on the 1, we had a shallow retracement. Price pushed into the 118, 127 zone. So if you're trading this off a 1 hour time frame, this would have been your entry here, right? This would have been your entry right here off this trend line break, right? Now, what you could also look for is a pullback on this, right? If you want to be more aggressive in your entry, look for a pullback to see if these levels hold and we don't break above that monthly level. And then get that reversal back to the downside, like so. Okay. This here would have been a level of support at one time, right? On the 1 hour time frame. Don't believe it was on the daily. Nope. Was not on the daily, but on the 1 hour time frame, this was a this was a level of support here, right? So you could see price come back and retest this level, right? Or give you a deeper push. So if you want to be more aggressive in this, that's totally up to you, but pull back, right? And then see if we get a continuation to the downside to break this trend line here. So from a technical perspective on the 1 hour time frame, right? The Fibonacci sequence is playing out as expected. 118, 127, and we're looking at that move to the downside. Okay. So that's the Aussie New Zealand, right? If you get a pullback here, you can enter that and then look for that move to continue to the downside. So that's one to keep your eyes on for a short-term perspective and from a longer-term perspective. Okay. Any questions here on this Aussie New Zealand? Nope. Okay. Cool beans. We'll take a look at this euro yen. These yens were interesting as Jerome Powell was talking yesterday. And then also we have that negative sentiment coming out of Europe, right? The negative consumer sentiment. So on this euro yen, right, we've been looking at this move to the downside and for that downside movement to continue. And that's ultimately what we're getting, right? We never got that full 38.2 retracement, and price has been pushing to the downside after this nice retracement here. Okay. Coming into a level of daily support, right? As that push continues to happen. So as we come down to the 4, right? We looked at this earlier in last week, right? What's the date? 27th? Yeah. Last week we had this push up to the upside, right? Nice deep retracement. And then price started crashing through the levels. So yesterday we had this as Fed Chair Jerome Powell was talking, we're getting this retracement on honestly a lot of the yen pairs, right? A lot of the yen crosses, they held up relatively well at some of the levels that they were at. We saw the pound yen push to the upside some more, and even the Aussie yen kind of held its level. Benny, did you talk about bond yields yesterday? I believe you did.
Just briefly. I didn't go into too much detail, but then it takes a while sometimes. So I just kind of just glanced over it yesterday.
Gotcha. Okay. But these yens held up, right? And then overnight we started to get a breakdown, right? And they're starting to press to the downside. Now with this euro, right? We read the article in regards to the consumer sentiment continuing to deteriorate, leading to more downside pressure on that euro, right? And that's what we're seeing here. We're seeing this pressure to the downside. We're looking to see if we got to break that trend line. We did, and now we're headed to the downside. So on the 4-hour time frame, our D extension is here at 136,340, right? So it's a beautiful move to the downside. If anybody held through all of the bouncing, the back and forth, right? You know, nice bit of profit here. That's your next target level as we make our way to that daily 382, which is just below this weekly support here, right? So it's been a nice move to the downside so far, right? Looking at 400 pips with about another 400 or so to go to the downside. All right, so that's the euro yen. Once we get to this this 118 level, we'll see if we get a swing high and a pullback, depending on how the market is moving and what the sentiment is. If we get a decent retracement, could be a potential opportunity to add to the position here, right? So as we drop to the 4 and we look at this, and I'm sorry, drop to the 1 and look at this. This is that movement to the downside here. We're talking about scaling into the trade. On the 1-hour time frame is another area that you can do that. And here I actually made that decision. My original entry was here, right? We had a fresh AB boundary, right? We had a trend line break on the 4 entry here, press down. On this next fib, we got a 618 retracement in conjunction with this weekly level that we had just broken through, right? So I added to my trade here. So I had 2 positions now running in this direction to the downside, right? We're coming in, well, we hit this 1-hour D extension now, but this is textbook scenario of how you can add to that trade as price is moving in your favor. I didn't break that down when it happened on Monday, but that's what occurred. So I did add a position there. So I have 2 positions now running to the downside as we come into this daily support level, right? And then, so again, the cycle will continue once we get a swing low, right? Wherever it comes, if we get another retracement, right? If it comes back into my sweet spot, I'll look to add another position to it. If it doesn't, I'll just let it fly, right? Just let it ride until we get the opportunity where it does. Okay, so that's the euro yen. Wait for a swing low, and we'll see if we get a high price to be able to enter that thing to the downside. On these yen crosses, just use confirmation if you're trading the B2C move, right? Make sure that you get the trend line breaks. So just like as they were running to the upside, it can also run to the downside in the same fashion, especially depending on how data comes out today and as we move through the coming weeks. All right, so that's the euro yen. Any questions? Cool beans. Pound yen. Right. So yesterday was very, very, very interesting as you watch price action as Jerome Powell was talking. But tons of consolidation here, right? But yesterday we had a strong push back to the upside, ran right into this level of daily resistance. And then you see the reaction now pushing back to the downside, right? Could not break above this daily level, right? Which was a support level, the resistance level created here. And now we're running back to the downside. So if we drop down to the 4, yesterday as I was watching this, I was looking to say, okay, if we break above this level, we could get to this 4-hour D extension level. But we had to break above that level, and we couldn't do it. We couldn't do it. My entry on this one was a little bit lower, and I did initially get stopped out. But as price pushed back up and we got this reaction off this daily level, I did re-enter that position for this move back to the downside. So, but we got an inner trend line break here on the 4, right? And we're present to the downside, sitting at this middle trend line now. Could get a pullback and then looking to see if we get a continuation throughout the day today. Okay, so as we drop down to the 1, this is what that sideways movement looks like. It's messy. It's messy, but double top scenario again, right? We've had quite a few of them occur in this move back and forth, but essentially we're in a range, right? So you can take out on these lower time frames, you can take out that fib and literally just look at it from top of the range, bottom of the range, top of the range. Now we're headed back down to the bottom of the range. Okay. So now it's a question of when we get to the bottom of the range, how does the market respond? Right? How does the market respond? Does it finally break through this daily level that we couldn't really stay below? Or do we get to the bottom and then do we turn back to the upside? So if you're not in this, allow this thing to do its thing, let it run to the bottom of the range, and then we'll see if we get a reaction once we get here and a push back up, or if we get a strong break to the downside and a pullback and a retest of it. Something like that throughout next week. Let's see if the price continues to move to the downside in favor of the yen. Okay. But that was the range play that was available yesterday as Jerome Powell did his dance. So yeah. So that's the pound yen. And that's all I had. Does anybody have any pairs that you guys want to take a look at? Benny, you got any that you got your eyes on that you want me to cover?
No, not really. I'm kind of waiting for the dust to settle with this
After the GDP.
Yeah, because like I said, the coast will be clear for me then.
Okay.
You know, once the GDP numbers come out for the second quarter. But we know we don't have another Fed meeting until September. So I'll be heavy on the technicals from there.
Yeah.
You know, so it's kind of, I think that's what's kind of holding the market up a bit. Everybody's waiting on that GDP number. So
yeah, for sure. I'm with you on that. All right. Anybody have any pairs that you guys want me to take a look at? I can take a look at those now. This is that dollar CAD on the 4-hour. Still watching it to see, right? After the GDP number comes out, do we get a reversal on this, right? I was looking to see if that daily level held, and it did not, right? Continue to push to the downside. Got into that 118, 127 zone, just past it. So we'll see if we get a reversal and a push back up. But we'll see how the market responds through the day to day to see if we get a trend line break on that. All right, so that's the dollar CAD, right? Didn't really get a nice break, sideways movement, push down. And then that would be your aggressive trend line to the downside there. So we'll see on that one. Yeah. Like so. All right. How do you scalp with the strategy? Down on the lower time frame, still using the fib sequence. So you'd literally be going down to the 15, right? And it's more of a methodology, a thought process behind the market and how the market moves in waves. But you just drop down to your lower time frames and you run your fibs and do the same thing, right? So your 15-minute time frame, that's your 15-minute fib to the downside, getting close to that D extension there. And so you just run your fib, right? Bang. And you see, right, if you play the B to C moves, AB boundary formed, trend line break, push to the upside, right? So your fib sequence still plays out the same, right? There you didn't get a retracement, momentum pushed you down. Here, the extension was achieved at a level of daily support, right? Created a swing low, you got a trend line break, bang, move to the upside, right? So it's literally utilizing the fib sequence on the lower time frames just the same. Here, we didn't get a 382, so shallow retracement, price pushed up to the 118 and 127 zone, right? Run your trend line to the upside, trend line break, stop above the high. Whoops, that's not what I wanted. Right? Stop above the high. Entry off the trend line break. And then you're looking at your 2-to-1 scenarios. 18 pips, so you want 36. Bang. You got your 2-to-1. Right? In and out. So if you want to do that down there, right? The thing with scalping is you have to understand that you have a higher probability of getting stopped out, right? So mentally you have to be able to stomach a lower win rate, right? You got to be able to stomach that. So what I say is learn to swing trade first and really be able to hone in on your rules and really develop that discipline so that when you get down to these lower time frames, right, you're able to see the market a lot more clearly and you're really, really stern on the rules that you're following, right? You're really stern on the rules that you're following so that you're not jumping into situations like this when you didn't get a trend line break, right? You didn't get a trend line break here. If you enter that trade, that's an L for you, right? And you really, really sit on, you're specific about what those rules are, right? You've written them all out in detail, right? And you've developed the discipline to do it on a consistent basis. Then you can flow between time frames, take some of those scalping opportunities, take some of the swing trading opportunities, right? And you have it all written in your rules. In these scenarios, I'll drop down to the 15-minute time frame or even the 5-minute time frame, right? You can even drop down to the 5-minute time frame and do exactly the same thing, right? Do exactly the same thing. Run your fib, right? Bang, to the upside. Got a double bottom here to the upside, right? Run your fib down. Now you're sitting here on the 5-minute time frame, shallow retracement, prices hovering this 118 to 127 zone. Do you get a strong bullish trend line break and then place your stop below the low, right? Place it down here, or you can place it here once that swing low forms, right? So you really got to be dialed in on your rules, and you have to be dialed in with the discipline to stick to those rules, right? So that mentally you can manage the game. Mentally you can manage the game, right? So, but the process is exactly the same regardless of the time frame that you trade on. Process is exactly the same, no different. Deep retracements, B boundaries, it's all the same regardless of the time frame. And that's even regardless of the asset class, right? You guys seen us look at cryptocurrency, right? You've even seen us look at S&P 500. It's exactly the same, right? Here on the S&P 500, right? We come back to the daily time frame, right? This is our down fib on the S&P, right? Price is coming right into your 618 retracement level. Bang, right? So now do we get a turnover and a push back down to the downside? Well, we drop down through the time frames. That's your down fib on the 4, 618 retracement, pushing a little deeper into it. All right, so we're going to wait for a trend line break. Drop down to the 1-hour time frame. Drop down to the 1, run your fib to the downside. you're in a deep retracement zone. So again, we're waiting on a trend line break. We get a trend line break, we have an opportunity to play it to the downside. Continue down through the time frames and look what you get, right? Let me show you this. Right? You had a shallow retracement here, momentum continued to carry that to the downside. You wouldn't have entered that trade, right? Here, shallow retracement, price pushed down, didn't quite get to that 118 zone, but right, run your trend line to the downside. You got a trend line break, price pushed up, 50% retracement, right? Then you did get price to push down into the 118, 127 zone in conjunction with a weekly support level. And then you got a deeper reversal, right? So now you're running your fibs to the upside. Now look what you got. Shallow retracement, 118, 127 zone. From a higher time frame perspective, you know you're at a 618 level on the 4 hour. You're coming into a 618 level on the daily, right? If price pushes to this D extension, you'll be at a 618 on the daily, right? So now this fib will reset and we'll look for, nope, not that. We'll look for a new AB boundary to form like this if it hits that D extension. And then you can play the AB boundary in the reversal, right? This is on the S&P 500, right? The SPY, 15-minute time frame. If you drop down to the 5-minute time frame, you get the same thing. You get the same thing. Look. Shallow retracement, 118, 127 zone, bang, deep retracement. Right? Here you shallow retracement and price just carried. Right? So now on the 5-minute time frame, you got a new AB boundary that formed. Right? You got a new AB boundary that formed. If you get another shallow retracement here and price pushes up to this 118, 127 zone, which on the 15-minute time frame would be your D extension, right? Be your D extension on the 15-minute time frame. On the daily time frame, it'd be your 618 retracement. On the 4-hour time frame, it'd also be your 618 retracement. All things come into alignment. You get a trend line break. Bang, that's your opportunity to play it to the downside. You can scalp this for 20 ticks, making some money to the downside, scalping it or playing it long term. So it's all the same. It's all the same. It's all the same. It's all the same.
And your trend lines, was it the smart trend line that held up like that throughout you going back and forth from the different time?
I know I drew these manually.
Yeah.
I drew these manually, so some of them need to be adjusted a little bit, but
I just did. I was like, wow.
yep. No, those I drew manually. Yeah, those are dramatic. But I appreciate that as far as me making it look easy. However, it literally comes with time. It literally comes with time. Like the number of hours that we spend looking at these charts and having these conversations and say, okay, this is doing this from a fundamental perspective. This is what we see. What does that look like? And the number of hours that we spent doing it, right? So just think about it. We've been doing these live sessions for over a year now. Tuesday, Wednesday, Thursday, and Saturday. That comes out to like 700 sessions or something crazy like that. Right? And that's just the time that we spend with you guys. That's not the time that we spent before this. Right? And it's not the time that we spend outside of sessions with you guys looking at these charts. Sitting on the phone, 10, 11 o'clock at night, right? What's happening here? What are you seeing here? And that's not talking about the hours spent before this going through the trials that we did, right? Benny 2013, 2014, myself 2015, 2016, Casey 2016, 17, right? There's hours and hours and hours of time on these charts, right? And the reason that we created this environment is because we wanted people to, you hear me say, compressed time frames, right? To be able to learn from us and the mistakes that we made, so you guys don't. Yes, you have to experience these things to really, for it to really to solidify, but so you guys don't have to go through all of the experiences that we did, right? And to really be able to become consistently profitable in a shorter time frame than it's taken us, right? Some of the things that we went through, like, it would have made a lot of people say, nah, I'm not trying to do this. Right? But it takes time. It takes time. It takes time. It takes time. That's why you hear me say all the time, you have to be willing to put in the time, the effort, and the energy that it's going to take to learn this skill. Because it's a skill, just like going to school. Just like going to school, just like learning how to walk, just like learning how to ride a bike, just like learning how to play a sport. It takes time to develop those skills. Michael Jordan didn't become the greatest basketball player of all time overnight. His work ethic was insane. His work ethic was insane. His dedication to be the greatest was greater than anybody else's. If you look at any elite athlete, any elite actor, actress, like, their dedication to be the best in their craft is immense. So there's no different for us, right? And the other thing about this sport and this game that we play in these markets is there's no minor leagues. Also, on these charts on a daily basis, we're trading with the banks. We're trading with your big time traders that have been doing this for an extremely long time. There's no minor leagues in this. You don't have the developmental league where you can work on your skills. You don't have college where you can start to develop to play with people of your skill level. No. You got a demo account that you're going to be taking trades with all of the big time players. So in order to play with those big time players, you have to understand A, how they think, and B, understand how you think and understand yourself so that you can really develop that discipline. Because that's the game. These technicals you can learn, right? It'll take you some time to really understand it and see the candles and understand the wave sequence and understand support, resistance, and trend lines. But then once you get that down, the major part of it after that is all between your ears. How do you manage yourself? And are you committed to really doing that? Which is why like I said, we created this environment the way that we did for specific reasons, including the Saturday ritual, including Mindset Monday. These are key pieces to the game that you really have to hone in on and be disciplined with. You got to. And the more you study these charts, the more you're growing this skill, the more you will grow personally as well. It's not just about these charts, man. It's about life, how the world works. And you'll hear me say all the time, people want to separate us and have separate things, but at the end of the day, everything is always connected in one way or another. Just like these charts and how you see them and how you evolve is connected to how you evolve as an individual. It all plays together. It all plays together. So, cool deal. Any questions? Did anybody have any pairs you guys wanted me to take a look at? I got off on a tangent. Great questions though, man. NZDJPY. Yeah. The mug is on the move too. Let's see. NZDJPY. Let me clean this up. We'll bounce back out. And there we go. All right. So NZDJPY. Overall, moving to the upside. Take these trend lines out. Like so, right? Overall to the upside, we run our fib on the daily time frame. Bang, that's where we sit. We got a 50% retracement, price pushed up, and we've been in this range, right? We've been in this range. Take that out. That was our 15-minute move off the weekend. Take that out, right? So in this range, we're moving sideways, okay? Moving sideways, pushing down. We're at this daily support level right now, right? From a daily time frame, but it's just been sideways for the most part once we got up here for the second touch of that daily resistance level. So as we drop down to the 4, zoom out again. And let's see. Run that fib sequence from the low. So on the 4-hour time frame, right? That's your AB boundary there. And that's that range that you're seeing, right? And you see it get smaller and smaller and smaller. Okay. So that's your range there. Got a potential head and shoulders pattern playing out there. So that's your range on the 4, right? You got a 50% retracement again on the fib, but we're not able to break out to the upside, right? Haven't been able to push down and break out to the downside, just to push sideways. So now as we get down to the 1 hour and we zoom out, we take a look, right? You'll see your fibs get taken out all kinds of ways back and forth, right? We won't run them, but you'll see at some point, there we go, right? Once you start to run these things, they expand, they go, and then we got taken out, right? We got taken out, pushed back up. So all of these will be smaller fibs on the back and forth movement, right? All the way up until a recent time. So what you can do now on the 1 hour time frame, right? Come to the most recent low right here, run your fib to the upside, right? And this is the move down. Okay. This is the move down. So you can look at it from this perspective. Price is pushing to the downside, sitting at a 786 retracement or 86 retracement off that last push, right? That's one way to look at it, right? And price is moving to the downside now. Okay. The other way you can look at this is run your fib off the high, right? Price is moving to the downside. So we want to track this thing moving down. We got an 8.6 retracement, right? Price is pushing down, matching extension. Did it miss that level? Let's see. 85746. Interesting. Our rhythm didn't pick that one up, right? Technically, we hit that level just barely. It's counting it as a miss. So this will reset once we get to that 786 level, just below where we pushed. But that's where we sit, moving to the downside, right? So you also have here actually that's a crown. King's crown pattern here. Took out that previous low. Came back to your resistance level for see the right tip. Right. So if this plays out, we're looking at that move to the downside. Shorter term perspective. Right. The NZD-JPY is also used as a risk on, risk off indicator. Right. So if this gets going to the downside from the higher time frames, it could potentially see us shift risk sentiment. Right. But sitting in the King's crown pattern, if this plays out, we got a 50% retracement off of that push back to the upside, the right tip. So if this thing plays out, we could be headed to 83.61. Okay, we'll see. We'll see. So that's from a lower time frame perspective. We know overall we're in a range, right? But that will put us back at the bottom of that range, right? We'll hit that level, then we could see that continue to the downside here, right? This is also a yen cross, so we'll see how things bounce back and forth with as the dollar sentiment continues to change. But sitting at the top of that range overall, looking to see if price continues to the downside, right? So I'm bullish on the dollar, and I'm ultimately bullish on yen crosses. So we'll see if this plays out to the downside and see if we break back below this daily level and get this push down. Okay. So my overall bias on this is bearish. Right. Yes, we got deep retracements on the daily time frame, but we weren't able to break out to the top side. And there's your trend line there. Then here's your trend line to the downside, like so. So we'll see if we break below this daily level, right? We could see more downward movement here. Okay, but this is a crown pattern that I look for it to play out. If it doesn't, we'll push back up to the upside, take out the highs, and then we'll look at it differently from there. But right now, my bias on this is bearish, unless I get really a break of this outer trend line and a push back to the upside. We'll have to break above this daily level also. But fib sequence wise, harmonic pattern wise, I'm looking for this to continue to the downside. Yeah. You know, you guys have heard me talk about this quite a bit. I do foresee yens. We could get some more bounce back and forth, but over the long term, yeah, I'm bullish on the yen. Yeah. And it's not for anything that the yen is doing, right? It's not anything that Japan is doing, but it's more about the current climate and potentially, right, things, the sentiment continuing to sour regarding your corporate sector, regarding investors and their comfort with the interest rate increases. We're going to have some silence for a month. So that's just my thought, right? So we'll see if it plays out in my favor, right? But my overall bias on yen pairs is that yens will pick up some steam. So we'll see. But that's my bias on this NZD JPY. Looking forward to continuing short. Questions on that? Nope. All right. Cool deal. I know it's a lot of back and forth, but yeah, being in that range, right?
Yeah, I didn't know whether to see that as a reverse head and shoulders or a crown pattern.
Are you looking at it from the downside here?
No, squeeze out, zoom back in some.
Right here.
Like, yeah, starting right there. I didn't know if that was considered like a reverse head and shoulders. But I was looking at current price and I was like, that looked like a crown. So I left it alone.
Yeah. And it's back and forth, man. Yeah. And when you're in doubt, definitely don't dive in. But you did have this action here, right? You did have that action here. We haven't been able to push. So if it does, right, it'll be a longer push to the upside like so. But that would have been your inverted crown pattern there. Right. So we'll see. We're in a range. We could push back up to the top of this range and complete that. Right. Time will tell. Time will tell which one plays out. Right. But I see what you're saying here on that. Yeah. Cool deal. I'll take a look at one more. We had GU. Interesting. We pushed deeper and we ran into the trend line on GU, right? So here we go on the daily time frame. Go. Daily time frame, right? We talked about this. Price just been hovering around, didn't get to a 382, right? Off the B boundary, just been pushing sideways. Came into this daily resistance level, right? We said if we hold, we'll get that continued press down. We broke above it, right? We broke above that daily level with the conversation yesterday, right? Came back into a previous support level, right? This was support here, right? And we ran right back into that level. Okay, so we'll see if price continues to the upside, breaks above it. But the other thing that you have is price also ran into your downtrend line. All right, price ran into your downtrend line off the daily time frame. So if you get a break of this trend line, could definitely be in for some more bullish movement. Okay, stays below that trend line, could be headed back down, as we've been looking at, come back down to this daily, this monthly support level, and potentially give us this double bottom look. Right, but that will call for the dollar to gain strength, right, over whatever the next period of time will be. So we'll see, right? So let's drop down to the 4. This is the look. On the 4, we've talked about it, right? We got a 618 retracement. Now price wasn't able to fully break out, right? Got to the daily support, pushed up, came back to this daily support level, it hovered, pushed above it, and that's where it ran into that trend line. And now you see we're getting a reaction back down to the downside. So we'll see if this thing fully turns over and continues its press, its move back down to this D extension on the 4, which is also in line with this monthly support level, and that double bottom all the way back here, right? So we'll see, right? We're getting a reaction now at the trend line. We'll see if that reaction continues, okay? So right now, bias is bearish, right? Bias is bearish. If we break this trend line, we could be in for some more bullish momentum, right? So,
Hey, Ryan.
Yes, sir.
So quite often your pound tends to rally with the stock market and the risk sentiment on the stock market. So we saw that relief rally yesterday. And when you look at across all the currency pairs, the pound across the board performed fairly well.
Yeah, it did. That's a great note, bro. Appreciate that. So to that point, right? If the stock market rallies, we'll see the pound push, right? See the pound push to the upside like it did yesterday. If it doesn't, if that sentiment continues to sour, right? And that too also plays into, right, the dollar gaining strength, right? Sentiment souring for the stock market. We'll see this sell off. All right, so it's all about the sentiment and how investors take the comments yesterday, how they look at the GDP number that comes out at 8:30. We'll see where that pushes the market. Right, but right now we're getting a reaction, so we'll see how that plays out throughout the day today. Okay, but come in line with that trend line there. All right, as we push up, this is on the 1. We move to the upside. Let's see. Yeah, that push to the upside took out your A there, right? So we got fibs running to the upside here. We got a 618 retracement. Couldn't quite get to the D extension. And we got that turnover. Okay. So we'll see. We'll see if we get this continued move to the downside. Okay. Questions on GU? You're welcome. Thank you, Kiki. I appreciate that. Any questions on anything that we covered this morning? No? Benny, got anything before we close out, bro?
No, sir. I'm kind of just neutral. I'm waiting. I'll wait for 8:30. I need the dust clear. I mean, it's kind of been of course, the market's always moving, but it's kind of been a drag. It's been on everybody's mind for quite some time, this GDP report. So I'm just interested to see what happens afterwards, and then I'll proceed accordingly. You know, this is one of those times where I'll go into the weekend after the dust settles and remark up all my charts. After everything happens, and it may be, you know, with the way this thing is going, if I don't see any fireworks, I won't be surprised. If I do, I won't be surprised either. So it's a unique time, everybody, when you still haven't completely solved supply chain bottlenecks. You still are dealing with some of the post-pandemic woes, especially when you look at China and still going through some things. Just globally, you're dealing with inflation. It's been a lot for this year, especially. It's been a lot to trade through because it's affecting everybody, the entire globe. You know, all central banks. You know, there's not one central bank that's not going through the same thing. So this is just not isolated to one part of the world. It's everywhere. So it's a quite unique time to be trading the markets. That's why journaling is important, to remember your experience, because this time is a key data point that'll last throughout history. People will always be referring back to these times. So other than that, then, hey, 8:30 GDP report, and look forward to seeing everybody tonight, 9 o'clock p.m. Eastern Standard Time. Great session, man. Happy anniversary again to you and your wife.
Appreciate it, man. Appreciate that greatly. Good people. Joy, that's funny. Have an awesome day, everybody. Have an awesome, awesome Thursday. And we'll see you tonight, 9 p.m. Eastern Standard Time. Peace.
Thank you.
Thank you.
You're welcome.